Hello, I'm Haider Malik, host of the Mehmi Financial Group podcast. Today's topic is remote projects, big machines, financing equipment for mining and northern bills. Working in Canada's remote regions demands specialized heavy machinery, articulated dump trucks, drills, excavators with cold weather packages, and modular camps. Mobilizing and maintaining that equipment far from supply centers and dealing with extreme conditions also strains cash flow. In this episode, I'll walk you through financing strategies tailored for mining operations and northern infrastructure builds. First, project backed term loans structured around mine cash flow forecasts. Unlike standard 5 to 7 year loans, these facilities align principal repayments with quarterly production revenues or government grant milestones. Present your feasibility studies, production schedules, and offtake agreements to lenders. Detailed cash flow projections often unlock up to 90% financing on heavy haul trucks and drilling rigs, with spreads 0.5 to 1.0% below conventional loans. Next, modular equipment leasing and rental. For remote camps and temporary crushers or power units, short term rental eliminates transport and storage hassles. For core fleet assets, rock trucks, excavators, loaders, operating leases of 36 to 60 months include maintenance, winterization kits, and seasonal payment holidays. The lessor bears residual value risk. You preserve capital for site development, fuel bunkering, and labor. Sale-leaseback transactions can free up equity in existing late model assets. Sell paid off trucks or modules to a finance company and lease them back under an operating agreement. You receive a lump sum to cover mobilization costs, lay down area preparation, or new environmental compliance upgrades while continuing operations without equipment downtime. A revolving line of credit secured by equipment appraisals or mined ore receivables provides on demand liquidity. Remote projects often face long cash collection cycles and held back retainers. With a properly sized facility, you can draw up to 70% of appraised equipment value or 80% of receivables to cover drill site crews, helicopter lifts, or camp utilities. Interest accrues only on used balances, and you can repay as shipments clear customs or mines begin production. Vendor financing and OEM partnerships play a key role in northern builds. Manufacturers like Caterpillar, Komatsu, and Sandvik often support mine startups with deferred payment plans, stepped leases, or subsidized warranty packages. Leverage your project award or exploration financing letters to negotiate promotional terms, 0% financing for 6 months, or bundled fuel efficiency services to reduce upfront outlays. Government and indigenous partnership programs can lower your cost of capital. The Canada Small Business Financing Program covers equipment loans up to $1 million with shared lender risk. Programs like the Northern Project Support Fund and certain provincial mineral resource grants offer forgivable loans or interest subsidies for infrastructure and environmental compliance equipment. Align your financing draws to follow grant approvals and avoid tied up cash. Before committing, run a total cost analysis comparing loans, leases, sale leasebacks, and vendor packages. Include transport and cold weather retrofitting costs, maintenance, insurance, residual value risk, and applicable tax credits. Model cash flows under scenarios such as road closures, weather delays, or commodity price swings, and stress test each structure for covenant compliance. 3 action steps. Compile detailed project documents, feasibility reports, production schedules, offtake contracts, and equipment specs. Engage a mining finance advisor or broker to access lenders, leasing firms, and government programs simultaneously. Compare proposals on true cost of capital, repayment alignment with project milestones, and bundled services like winterization, maintenance, and telematics. By tailoring financing to the unique rhythms of remote and northern projects, you'll preserve working capital, manage logistical complexities, and bid confidently on Canada's most challenging builds. I'm Haider Malik. Thanks for listening.